All right, so thank you so much for hanging there. Last day, last session, but there's still a lot to cover today. So I'm Renata Villanova-Lobo. I'm responsible for global clearing and FX solutioning and commercialization at JP Morgan. And today I have the pleasure to moderate this conversation with two phenomenal industry leaders in the payments industry. So I have Kalyani Bhatia, who is the global head of payments, go-to-market strategy at Swift, and Patricia Sullivan, global head of institutional cash management at Deutsche Bank. So thank you so much, ladies, for joining me today. So I think that it's visible that the industry of payments has been very focused on improving cross-border payments for quite some time. And by that, we mean making payments faster, cheaper, and safer. And I think for many different reasons, this has been a focus for the past few years. And there are a couple of initiatives ongoing, not to say many initiatives happening at the same time towards the same goals, right? So we can name the ISO 20022, the pre-validation services that are being developed. We can talk about the bilateral, multilateral agreements, CBDC. We can talk about the private and public partnerships and many others. I think that the fundamental question here is, are these initiatives actually contributing and maybe complementing each other towards achieving the same goal, which is to make cross-border payments better? Or are they competing with each other or even overlapping with each other? So to help me answer this fundamental question, let's go through some other questions with the panelists here today. So let's get started with you, Kalyani. So many say that the non-traditional initiatives like digital coins, multilateral links, and some others could complement the traditional correspondent banking model, which has been dominant for quite some time. Do you agree with this view, or do you see a direct competition with incremental risks to be considered?
It's a great question, and I do agree. In the last year, we have seen tremendous strides made by the industry to really stand up a regulated digital asset platform and make that available for traditional market participants. And if I think of the role of Swift, our main thing in life is to really connect additional participants, platforms across various markets to our global network. And so if I think of digital asset platforms, it's just another natural extension of something that we would normally do. So if I talk a little bit about what we've done in that space from a technical perspective, we've already proven out through a lot of experimentation that we can connect to just about whatever form of value and technologies that we're talking about, whether it's DLT or blockchain or CBDCs, et cetera, and really with the goal of demonstrating what our vision is on how we facilitate interoperability between digital and more traditional systems. And we're planning to now to take that out of the sandbox and do some additional pilots with the community and do some real life world cases with live transactions. So that's kind of the next thing that we're talking about to further refine and develop this model that we've been working on. And beyond the technical side, we're also updating our standards to include some of these digital asset pieces and really trying to mobilize the industry again to adopt common standards just like ISO 20022 to create this unified interoperable system. And ultimately, why are we going through so much effort? And we really do believe our community members should reuse the infrastructure and the network that they already have, so that let me build it once, so that Trish, you don't have to build it, and Renata, you don't have to build it.
So Trish, what's your view on that? Do you think those initiatives are complementing each other, overlapping, or even competing against each other?
I definitely think they're complementary. Swift has been a great partner over the years, and a couple of initiatives that we're working on now, specifically at Deutsche Bank, I think are further reinforcing how these different models that are developing, whether they be on the blockchain or with DCB, are complementing each other. So a couple of times up on the stage, I think you've heard mention of Partior. And that's an initiative that Deutsche Bank is now an investor in. And Partior is definitely designed to help make settlement of payments faster, cheaper, and ultimately more secure for our clients. But Partior, when you're implementing it, doesn't have to be something that's standalone. It's something that very much can be implemented and work in collaboration with SWIFT by using SWIFT messaging and still enabling that settlement over the blockchain. And for the banks that are implementing Partior currently, we are seeing that model develop. And that's certainly Deutsche Bank's objective as well. You've also heard, I believe, several times now about Project Agora. And this is something that Deutsche Bank is very excited to be a participant in, along with 7 central banks and over 40 different financial institutions. And Project Agora also can be complementary with SWIFT. Project Agora is using tokenization for commercial deposits and providing a chain to central banks to operate with CBDC. And once again, it's something where you can use those additional rails, but still work in partnership with SWIFT messaging. So it's possible.
So still with you, Trish, on that. So as the head of institutional cash management at Deutsche Bank, you just highlighted a few initiatives on the non-traditional side of the equation, right? So as Partior and Project Agora. So could you give us a little more color on what exactly the organization is expecting in terms of benefits to your customers coming from those initiatives, and how that can be complementary to the current model and to the benefits that your customers are getting from that model?
Yeah, absolutely. So specifically with Partior, I'm now one of the board members, and we're seeing really significant uptake with the number of banks that are joining on as participant banks. Partior has settlement banks and participant banks. So for example, Deutsche Bank will be a settlement bank for Euro and US dollar, but then we have many other banks that are joining on as participant banks. And this is something that our clients are quite interested in for that ability to have atomic FX settlement on the blockchain. So that addresses the need for quicker movement of payments. Also, we are seeing a need from our clients to have payments that are being transferred more securely with greater transparency. So I've been very, very pleased with the interest that we're seeing from other financial institutions to think about how they can connect with an additional rail. And Partior is doing, I think, a really great job trying to minimize the impact on how banks can join as participant banks in this new network. They've launched something called Node as a Service, where a participant bank doesn't have to build its own infrastructure, but can rather have that node operated by Partior. So we're addressing the client's need for speed, safety, and lower cost through Partior. And I think Project Agora is in an earlier stage than Partior. Right now, really more in the design stage, but it's an excellent example of a public-private participation network to address clients' demand. Again, I think a lot of these initiatives that are building all get back to need for greater speed, cost reduction, and security, but particularly with Project Agora, having that link to the central bank and ability to provide, I think, greater management of liquidity is a key differentiator for Project Agora versus Partior.
So would you say that those initiatives or the services coming from those initiatives would be less for the traditional transactional flows in payments and more for complex type of payments?
No, not necessarily. So we're looking at both Partior and Project Agora as really another rail development. And it could be for standard commercial payments. depending on the corridors that our clients are interested in, it could just be a faster, cheaper way to move those particular payments. So not particularly something that's more complex, could be extremely routine.
Exciting. All right, so let's move on to interoperability. So Kalyani, starting with you. Interoperability has been a relevant barrier for a long time when it comes to making cross-border payments faster. And ISO 20022 comes with high expectations that interoperability could be significantly improved once ISO is highly adopted globally. So have we seen improvements since the ISO migration? And where do we stand today, and what's next in terms of improving interoperability globally?
Sure. So where are we? What improvements and what's next is what? Okay. So I know we've talked about ISO many, many times over the last 2 days. So this is one more time you're going to hear some of the numbers. But so where are we as a community? And I have January figures right now, but we do see about 1.5 million ISO messages being transacted on the network every day. 34.2% of the payment instructions have moved over to ISO from FIN. For the US market, of course, all eyes are on the Fed move in March, and we hope everyone and the team a very quiet and successful migration. We're still holding fast to reaching 86% by November 2025, and when we talk to our top 175 customers, that represents about 80% of the overall traffic that has to move, they continue to tell us that they're going to be ready. But of course, we've got to still have a lot of work to do, right, through the end of this year. So that's kind of where we are. From an improvement standpoint, I think the fact that cross-border payments and clearing and settlement all being on the same language across so many different major currencies is going to be a game changer for us, and institutions aren't going to have to make that switch between and convert data to one format to another, and that's going to just help things make things more efficient and more speedier. So just as an example, if we take what March is going to look like, we've got all US dollar flows on ISO, and think about just a year ago, CHIPS had its own proprietary, and then the Fedwire also had another. So you had to really spend time to map between each one, depending on which one you were going to work on. Other examples of improvements that I've heard banks that have put ISO 20022 throughout all of their branches and across their regions, and that's really helping improve the speed and efficiency within their own shop, as well as those banks that say that they're now able to interoperate across other financial institutions and platforms. That's all just helping the same kind of speed and efficiency game. And I think as time goes on and we see greater adoption, we're going to hear more and more of some of those examples. So what can we expect in interoperability? I have 3 different things, and I think we've got to get past interbank flows, and we really have to start looking at corporate to bank flows to help with speed and, to your point, liquidity management. And then the next one would be interlinking between instant payment systems. So that's what we're starting to see quite a bit of dabbling in. The instant payment plus guideline is also ISO 20022, so that opens up a lot of more efficient processing. And then finally, I think the next industry-wide initiative for me would be the transformation we're going to see in exceptions and investigations handling, which also will be ISO 20022 and help out with interoperability.
Good. So Trish, from a global banking perspective, are you seeing those improvements, and especially around euro clearing, and considering how relevant Deutsche Bank is in the euro clearing space? So are you seeing an improvement in terms of interoperability as a result of the ISO migration?
Yeah, absolutely. So I think the implementation of ISO 20022 is absolutely fundamental and a core enabler for interoperability. But even before we get to interoperability, it's a game changer for just the current model and how we're able to process our clients' payments much faster with less friction. So at Deutsche Bank, our STP rates have significantly improved with what we call a front-to-back implementation of the new standard. So it wasn't just a technical change. We actually updated all of our procedures front to back to make sure that we can truly see that STP increase, and our clients are responding really favorably to it. We're also working really closely with our client banks to do test cases with them. So we know as a major global bank, we often will have more resources available to us to do these types of implementations, and that's not always the case with other financial institutions. So we are really partnering and doing testing with our clients to make sure that we can work together to meet the, over 80% migration, towards the end of this year. So it's an enabler for interoperability, and I say that because, sometimes you can't participate in Party or you can't participate in Project Agora, but one thing every FI can be doing is putting in place the building blocks that will enable interoperability. And first and foremost is the ISO conversion. And second, I would say, is API, building out more use of APIs. And that will really position your institution to then not only be able to connect more seamlessly with blockchain initiatives or CBDC, but also some of the regional clearing networks that are developing, whether it be SIPs in China or Buna, in the Arab region, or development of a BRICS clearing network. Those do not have to be standalone, right? These can all be systems that operate together, but you have to have the building blocks in place first.
So still with you, Trish, acknowledging the importance of interoperability in the cross-border payment space, but at the same time, as we see more and more institutions experimenting non-traditional models, how could we avoid more fragmentation? And how can we make sure that we are improving cross-border payments and improving interoperability when now you have so many different models available that are not directly connected?
Yeah, I think that's a great question and a really important theme of this BAF conference we've all been attending. So when you go back to the origin of SWIFT back in 1973, and you think about the geopolitical environment at that time, there are a lot of similarities to the environment we're living in now, in terms of the geographic splits we see emerging, more focus on, economic protectionism, at different country levels. So when SWIFT was first, created, across 15 different Western aligned countries that were mostly aligned with NATO, it was in the Cold War era. And if you look at what's happening today, you definitely see strong movements building for almost an anti-SWIFT creation for the same reasons that SWIFT really came into force. So I think we have to work harder than ever to keep the focus across many domains on the importance of interoperability. And so what can we all do? In addition to preparing ourselves across those building blocks I mentioned, I think it's something we have to keep front and center with our supervisors and our regulators. So when you're having your regular meets with your supervisors and your regulators, are you weaving this into the discussion so that we as an industry are helping shape the direction of travel at the policy setting level, because it's not something any one country can do alone. So this is something we're weaving in now to all of our supervisory and regulatory discussions. So this isn't just, kind of the G20 roadmap off, in some document. This is really trying to bring that to life. Then with our clients, we're also stressing the importance of, when you're thinking about regional clearing networks, that's great, and that has a real value for many, many different types of payments. And I think there's great success with regional clearing networks that are building. But then you have to make sure that that can have a connection with more global cross-border payments and making sure you keep the connectivity with SWIFT, whether it just be for the SWIFT GPI tracking or other aspects. So I think we have a lot to do ourselves with building blocks, but then also our advocacy with policymakers and with our clients.
And thinking about interoperability versus fragmentation, so starting with you, Kalyani, what are the main risks or expected impacts of a more fragmented global financial system? and how to avoid them?
So this is perfect timing because we just published a new report that we commissioned with the Economist Intelligence Unit to really raise awareness of the consequences of financial fragmentation and some of the ways to mitigate it. So what did they do? And they really tried to predict what financial fragmentation would do to the world by 2030 and quantify its effects on global and national GDP and employment rates. And so they built different scenarios, looking short and medium term across 3 potential different futures of what 2030 might look like across 17 different regional economies. And they further enriched that model by speaking to local and kind of global experts in regional finance. So what did they find? And I think we all agree when we think about globalization and how that's made us a very more well-connected world, but it's been very threatened by financial fragmentation. And what do they mean by that? And I'm just going to read you their definition from the report. But financial fragmentation is a reduction in international financial integration and the disruption of cross-border payments, credit, and investment that ultimately reduces cross-border capital flows. So that's what they're talking about when they talk about fragmentation. So when they look at the worst case scenario, the decline that they see in these capital flows is accelerating the global GDP and reducing it by 6%. And it's resulting in nearly 280 million jobs that fail to materialize. So what they're saying essentially is fragmentation is making the world poorer. So that's one of their key findings in this report. They also did find out that no individual country benefited at all from fragmentation. And the ones that were hit most from a GDP and jobs perspective are the ones that were the most reliant on foreign capital inflows. From an employment standpoint, the more highly skilled worker took the hit more than lower skilled counterparts. So then they did speak a little bit about what can we do to mitigate this, and there were 2 things. And really, the first one is to maintain a well-connected ecosystem and how international collaboration, cooperation, and commitment to interoperability is very key. And those are all really core values of what we try to do within SWIFT for our global economy and our community.
Interesting. So moving on to regulation and collaboration. So it seems like international cooperation, regulatory harmonization, and technological integration are crucial to counter fragmentation. So Kalyani, still with you. What's missing from policymakers, financial institutions, and technology providers when it comes to evolving towards a more interconnected global financial system? How can banks help in this process?
So I think I have 3 points here, and I think everyone understands and gets that we need to facilitate interoperability, but that we also place a high value on community collaboration. So if I think of an example, the G20 and their roadmap to really enhance cross-border payments, that's a great example of how those 2 are really going to have to work together to really enable some progress. So that's the first one. ISO 222, I can't say this enough. We need to get kind of global adoption going on a wide scale, but not just adoption, but I want good usage. I don't want like for like. This has to be all of us in this game using the standard as it was meant to be to really get the benefits. So for me, that's the second one. And the third one is just digitization and what it's going to do to economic growth, ultimately to payment flows. And we have a great opportunity to continue to kind of link domestic and regional infrastructures to enable cross-border payments.
Okay. So Trish, we have been talking about the need for more collaboration and partnership among banks, fintechs, regulators, which is needed to evolve with improving cross-border payments. Are we making progress there? Or due to more global macro instability and geopolitical risks, institutions are creating their own bubbles and limiting, partnerships that could lead to local and regional benefits, but at the price of more global fragmentation. What's your sense?
Yeah. First, I'd like to give a serious plug for the paper Kalani mentioned by The Economist Impact. It really is an incredibly insightful paper that I think takes the dialogue up to the macro level to help people understand the real impact of fragmentation. And it really connects very nicely with your question, Renata. So I want to maybe take a page from the playbook that I think has worked very well in the financial crime compliance space. So within the financial crime compliance community, there's definitely an ethos that has built across over the years along the concept of fighting financial crime and really working across the public and private sector to help everyone understand that if we don't work together as law enforcement, as the financial industry, as regulators, we're not going to effectively tackle illicit actors and protect, communities around the world from these illicit actors. And it's something that's borderless. And I think within the global financial system, the same spirit needs to emerge, and maybe, it would be fighting financial fragmentation. There are real ills that we need to prevent, such as, drops in GDP, drops in employment rates, significant losses in foreign direct investment, if we allow this fragmentation to continue. So I think what we need to do better, I think there is definitely progress in the G20 roadmap, front and center talks about the importance of interoperability, but I don't think there's enough collaboration and a meeting of the minds on what exactly are we trying to prevent by coming together and fighting fragmentation. So that's something that I know we're trying to do through industry groups like BAFT, but also through direct communication with our clients and with our supervisors. And I think the more people understand the economic impact at a macro level, that's important, but then also just at a client level, this is something where our clients will benefit if we are able to allow them to use multi-rails and still deliver that service cheaper, faster, and more transparent.
Okay. All right, so final thoughts before we go through Q&A. So what are the predictions for the next 3 years around cross-border payments ecosystem? So what's your vision for the upcoming years?
I'm very bullish on it. I think what I'm seeing with Partior and the uptake we're having with banks wanting to join in as participant banks shows that there is a real interest in looking beyond just the traditional rails, but also the more institutions understand that this doesn't mean you have to build a separate whole infrastructure at your bank, the greater upside they're seeing for this. So I think the future is looking really bright for not only blockchain rails, but also the further build out with different CBDC projects that are going on. So more and more institutions are getting involved, and that's a good thing.
I think experimentation is going to continue. The question of CBDCs, there are 130 countries that are flirting with CBDCs right now. So there's a lot of people looking at this and getting involved. Will we be able to get to one global standard? I don't think so to this question. I think just the geopolitics of it all is making things very complicated for everyone to agree around the world. But it's going to happen, right? It will happen. I can't say, will it happen in 3 to 5 years? Absolutely, I think it will. And which is why we're trying to, again, leverage our infrastructure and try to connect as many as we can so that we can be prepared for whatever does come up down the pike.
Interesting. All right, so let's go to you, Trish, on the first question about Partior. So how does Partior work versus traditional rails, and what's the incremental value add?
I think probably the biggest difference between Partior and traditional rails is one, Partior doesn't require, multiple Nostro account openings, across all different banks, right? Through this node as a service model, you can link into the blockchain FX settlement process, and that's a real value add. to not have to maintain multiple nostros for various currencies that you want to settle in for your clients. It's also atomic, so it's super fast and doesn't require the same level of liquidity management. So that's a real plus. And Partier is now going into its 4th year, and you see faster and faster implementation as more and more participant banks come on board, learning from each prior one.
Good. So maybe for you, Kalyani, on CBDC, you just mentioned a couple of challenges, but do you see CBDCs as a path to global integration or a challenge to be overcome?
I think it's a challenge to overcome. I just don't see us all agreeing on which CBDC to use. Not even, there are some use cases that work really well, some that people are very worried about privacy concerns. I just don't think it's going to happen. I think it's a challenge.
Yeah. I was about to say, I think there's still a fundamental question to be answered. What are the use cases for CBDC, right? So I think many countries are still trying to answer this question, but I don't think there is like a strong answer to that yet. Good. Okay, so as it relates to the G20 payments roadmap, on a scale of 1 to 100, target state destination, where are we, and what are the major milestones to achieve to get there?
So I'm happy to take this one if you want me to. So just to give everyone an idea, there's 4 major areas when we talk about G20 that we talk to our communities about right now, and it's cost, access, speed, and transparency. So cost, they're looking for parity between instant domestic payments and cross-border. There are some limits depending on what kind of payments they're looking for. Access is, from a financial inclusion standpoint, making sure that, if half of the world has a mobile phone versus a computer, how do you offer those financial services to those populations? Speed, there are some very hard targets they're looking for. They're actually looking for 75% of your payments to reach the end beneficiary account in less than an hour, the rest within 1 day. And transparency is really talking about tracking of payments and transparency of fees, that we have that for end customers. So there's some really hard targets that they're looking to get done by 2027. And I will tell you, when we always talk about speed and transparency with our customers, all the regions are nowhere near meeting some of those timelines and targets that they're talking about. So we're being more forthcoming with looking at their data, sharing their data on what we see on the network, and talking about what are those issues that banks are struggling with on how we can tighten up the speed aspect of things. But there's still a lot of work to do. So I would say we're maybe 20-30% out of 100.
And do you think we'll get there by 2027?
I don't think so. And I think we're another piece that we're working on is how do we advocate with these governing bodies, and maybe we have to push out, given the data that we see and the fact that this is an ISO year, are banks really going to be able to focus on this year? Probably not. Mm-hmm. So what can we do to advocate for the community and see if we can push out some of these timelines?
Yeah. I think that last point, because a lot of banks are diverting their resources to the ISO rollout, it has been harder for them to prioritize other initiatives that would deliver some of the G20 roadmap objectives. And I think another area where we're definitely behind is in reducing the cost of payments. That's certainly, I think we have improved with transparency and with speed with many of the G20 supported initiatives, but I don't think cost reduction is even close to being achieved.
I agree. So a lot more to come. So I think we're pretty much at time. So thank you so much, ladies, for joining us today. And thank you so much, you guys, for hanging there. Hopefully it was a productive discussion.